Hello and welcome to the latest Greater Birmingham Chambers of Commerce Q&A. And today I'm delighted to be joined by Steve Walker, the CEO of Art Business Loans. Steve, hi, how are you?
Good morning, Paul. Very well in this changeable world and difficult world.
Yeah, absolutely. So Steve, just to sort of kick us off, give us a little bit of background about Art Business Loans.
Certainly. Art has been around for 22 years. Its mission is to provide access to finance to small businesses and social enterprises, originally in Birmingham, inner city Birmingham, underserved areas, but now in the whole of the West Midlands. And we now lend between 10 and £150,000, an important sort of figure for small businesses. And we lend them only where a bank has been unable to assist fully. So you can imagine we've had a very challenging time. We had a record year last year. We lent 3.6 million, and our biggest challenge, to be perfectly honest, Paul, was how we were going to go and get some more money to lend because the demand was great. And then COVID came along, and the world changed.
So yeah, and you know, we'll. COVID's dominating all our discussions, and we do want to talk about that. But I think that's one of those key points, isn't it, about what Art does in the normal scheme of things, is that you're helping those small local enterprises who, need some finance to really kick on, to really sort of flourish. Someone to take not a chance on them, but to give them that opportunity, and they fall through the gaps of traditional high street lenders. And Art is there because of its mission and because of the way, I guess, you're assessing the applications in different ways, and you're able to, £3.5 million last year lent out to businesses who otherwise wouldn't have had that money and wouldn't have been able to sort of flourish.
Absolutely. The average deal size was about £40,000 last year, lending between £10,000 and £150,000. And we lend alongside the banks or other lenders. And there's a lot of alternative lenders come on the scene in the last 10 years since the last sort of major hiatus and the credit crunch. There's a lot of alternative lenders, but we feel with it, we're different. We are a social enterprise, we're not for profit. We have a mission as well about creating and preserving jobs, which is, so we're a mixture of public sector money and private sector money. But we are a social enterprise. We're not driven by profit, and we're driven by our mission, which is to help those businesses access to finance and the jobs.
So it gives you a little more leeway then, I'd imagine, yeah?
It does. It's also relationship banking as it used to be, because we do go out when we're able to and not sitting at home in front of a screen. We do go out and actually see businesses and understand the businesses and talk to the businesses, just like a relationship banker used to do. We're not making your decisions based upon a computer says yes or computer says no. We're going out. In fact, one of our lenders is doing a Zoom call later on to a new borrower today, and using Zoom to walk around the factory. I don't know whether that's going to be the future. I hope it isn't going to be the future, because basically I think it's the face-to-face is what life's all about, isn't it?
Yeah, but it's amazing how, and we've seen that with lots of businesses, just how resilient and adaptable they are, and people are finding ways to do what they need to do, and certainly technology has been a massive sort of help in that. Now, Steve, so you mentioned, COVID hit the UK in March, and how's that impacted Art Business Loans? And then a little bit, what are you seeing out there? What are people saying to you?
Well, we had the first thing we had to do. We've had £6.5 million worth of borrowing out to 250 clients. So our first concern was them. And basically, we had to look, first of all, internally ourselves. And as I said to you, one of the things we were doing was trying to get more money. Yeah. So if you're a lender and basically you're going to lend money to businesses, you've got to know how much money you've got to start with. And we made what was the only decision we could make when we were already an enterprise finance guarantee lender. And we became an accredited CBILS lender. And of course, a lot of people know that CBILS is the first one that was introduced. Some people call it CBILS, probably named after Basil Fawlty and Sybil. Maybe it was faulty and it was changed 3 times in the first month, but that's another issue. But we're a CBILS accredited lender. And we had to make a decision: do we lend to the outside world, or do we lend to our existing customers? And it was a very easy decision to start with. We could only lend to our existing customers because we didn't think we got enough money, and we thought a lot of them would come to us. But in actual fact, some of them did come to us to start with to borrow money, but a lot of them really needed capital and interest repayment holidays while they actually looked at furloughing, grants, and took one step back. I mean, nobody's ever been in this circumstance before, where it's unprecedented as businesses that they closed down just like that. And really, at the end of the day, we had to look at those businesses. Now we've had a really good look at that, and 50% of our businesses we've given capital repayment interest on. We can't do that forever, because the one thing I would stress is with art and with other lenders, the schemes that have come in, Bounce Back and CBILS, it's not government money. It's a guarantee scheme. It shouldn't have been called a loan scheme. It's a guarantee scheme. It is the lender's money. And so therefore, it is the lender's decision. And people basically who are taking the loans are going to realise that it is actually the lender's money and not the government money.
So that's why and it has been a challenge. And I suppose, everything's moved at great speed. And, there's been some huge successes. I think that the job retention scheme, the furlough scheme has been
absolutely.
It's done exactly what it's meant to do and saved a lot of jobs in the early part of this crisis for sure. And there's been a number of grants which have gone out as well. And I think there has been some confusion with maybe just the flurry of support measures. And what's the difference between grants, which is, here you go, here's money to help you, don't have to pay it back, and then the sort of variety of loan options, which, as you say, is not free money, and it's not fresh money from government. It's just a scheme with certain criteria, which is advantageous to businesses, but there's still going to be a time when, like any loan, you have to repay. I mean, we've found that, Steve. We've put together a summary grid of all of the support measures.
It is excellent. It is excellent.
Version 20 now or so, trying to keep up with it all. But just to simplify. But so you were sort of finding in those early days, people were going, great, some additional cash important, but actually it's more around give us the time, give us the breathing space to figure things out, and sort of tide us over those first few months.
But then the smaller businesses, and that's why Bounce Back came in. I mean, I'll be honest, I thought Bounce Back should have been a grant scheme, if I'm really honest. I don't think it should have been a loan scheme, but it was brought out to basically make sure that the smaller businesses, it was targeted at micro and small businesses, survived, and the ones that needed cash then. And it's been a huge success, there's no doubt about it. Whether it will be huge success when you actually look at it, how many repay it back in the end, will depend, I think, on the economy and what's going to happen in the future.
Steve, what's the essence of the Bounce Back loans?
The Bounce Back loans it's up to £50,000 only. It's a maximum of 50,000. 25% of turnover is what you can get. It's only provided by the banks at the moment, and it will be, because it's at 2.5% fixed, which is an unbelievable rate. You'll never get a rate like that ever again. The same benefits as the CBILS, no personal guarantee, 12 months, and fees are paid by the government, and the interest is paid for 12 months. Then, as you said, it's a loan that's going to be paid back over 5 years. No early repayment penalty. It is a tremendous gift. I would advise anybody who is basically using it for business purposes, and we're actually hearing on the grapevine that some maybe are not sort of self-certifying that it's used for business purposes. It should be used for business purposes. It's a wonderful scheme, and it's got to be used. At the end of the day, it is a survival scheme. It will not last. It will last until November. I'm told that the CBILS scheme, which ends at the end of September, and the Bounce Back scheme will be fully reviewed during the course of this summer. Something else will take its place, but we don't know what.
And that's one of the things I know that we're certainly calling for is flexibility from the government with the whole variety of schemes, I guess, going forward. Because while lockdown felt uniform, there's no doubt that the unlocking is certainly not uniform, both in terms of the timing. We've seen that sort of staggered as different sectors, different businesses have been able to sort of get back to some semblance of business at different times, but also the lag effect, isn't it? Because you know, while cash flows were turned off overnight, turning that tap back on, it's gradual. It's a gradual return, because sometimes, you know, your customers aren't there, or the way you're able to set up and operate safely with social distancing measures means that your capacity is reduced. And so, you know, ergo that the support that needs to be there to help bridge the time before we get back to something like we were in February or March time is going to be very, very variable, and we need that flexibility, don't we, going forward?
Yeah, but the big change on bounce back for us, of course, was the third change, by the way, which came in, changed our market, because we were lending 10 to 150,000, and bounce back were brought in, and we were a CBILS provider, and one of the conditions was that we couldn't lend under £50,000. So we now lend 50,001 upwards. And the difficulty is, and I think for businesses that are chamber members and wider, to understand that you can only have one bounce back loan. You can't have a bounce back and a CBILS loan together. So if you basically need more than 50,000, really a bounce back, although it's 2.5%, is not for you, because you've got to go for a CBILS. If you have a bounce back and you've had 50,000 and you need another 20 or 30,000, at this moment in time, you can't have a CBILS unless you take the CBILS and the bounce back, pay the bounce back. Right. So it's complicated at the moment. I'm hoping personally that will change, and that's one of the things that and the sector, the CDFI sector as a whole, is actually advocating that we get back to 10 to 50. But at the end of the day, at the moment, that's what it is. Added to which, they are loans, as we said earlier on. It's going to get more and more difficult for businesses, because one of the things that a loan provider will do, bounce back is all self-certification. It's total self-certification. Tick a box, and basically, I'm a business that's basically been affected by, I've got a turnover of X, give the loan. And the banks are providing that, and they're doing a wonderful job at getting the money out.
Yeah, and they're getting it out quickly.
They're getting it out quickly. You can see that they've got 24 billion's gone out under bounce back, and there's only 8 billion gone out under CBILS. So it tells you everything when you think that the average bounce back deal's 30,000. So that is tremendous. However, you know, CBILS loans are going to be like most loans should be. The lender should be examining the viability of the business going forward, and that's very, very difficult for the reasons you said. They're all coming out. When do we know that the pubs are going to basically be, or the restaurants or the hotels are going to end up being half full, quarter full, or not even full at all, or empty? And
very challenging, isn't it, Steve? Because all that experience and knowledge in the past, in some ways, I wouldn't say it counts for nothing right now, but we're looking at circumstances where you know, there are so many unknowns that it's hard to assess and judge with any sort of confidence. I mean, so Steve, so you mentioned that when this first sort of hit, that you were there focusing on those existing businesses in your portfolio, the sort of 250 clients. I mean, how have you been working with businesses who are coming to you who you weren't already dealing with? And I suppose that's partly also for anyone who's watching, who's maybe thinking, I need some support, I'm working this through, can I come and speak to Art? What would you say?
Well, we're now open for business to the wider, the whole of the West Midlands, for any business, first of all, that hasn't been able to get their full requirements from the bank. Now, that doesn't mean in this day and age, or any age, that you have to have a decline letter from the bank. If you self-certify that basically you can't get it from the bank, then we'll look at it. And we're open for this. We prefer that the businesses approach their professional advisors, their accountants, and they should really go to the bank first. And I have to say that because the best deals are with the banks in terms of interest rates and the like. If you can get it from the bank, but if you can't, then come to Art and other organisations like Art. There's another one, BCRS, in the West Midlands, and Coventry. There's a CWRT. Come to us, and we will basically look at the proposition. And if at the end of the day it's a viable proposition, we at the moment have got money to lend with support from. Ironically, we borrow from a bank. We've been heavily supported by Unity Trust Bank, based in Birmingham. And basically, without them, in actual fact, we wouldn't have the money to lend at this moment in time. but we have. It's quite difficult, and challenging to go to a bank at the end of the day to borrow money to lend to the businesses that the banks won't lend to.
Yeah, I can imagine the model, but it's an important message, isn't it, for entrepreneurs and small business owners who have been really buffeted, as so many people have, by sort of coronavirus, but there are options there, and reaching out, as you say, sort of working through the right sequence of conversations, but. And you mentioned
talk to professional advisors, talk to brokers, talk to accountants. Basically, get advice as to what potentially available, including looking at the websites like your good one at the Chamber, and look around, look at what's available. I would also say that the one thing that British Business Bank have done tremendously well is to get an understanding of what the schemes are. Look at their site, and the frequently asked questions are fantastic.
There's certainly a lot of support out there, and I think it's this is one of those times, isn't it, where you've got to really do your homework, make sure you're having lots of conversations, and if you've got a fundamentally strong business or great idea, then again, there's still ways to look to develop that, even in these conditions. And we've seen in the past that some great businesses have sprung out of times such as this. I mean, Steve, just to sort of finish off, I guess, I mean, looking ahead a little bit, I mean, what's your, gazing into the Steve Walker crystal ball, how do you see the next sort of 6 months or 12 months even playing out, and that sense of recovery?
I thought you might ask me that question this morning, Paul. And I think at the end of the day, the next 3 months are the critical time. They will decide basically what actually is available, how businesses are coming out of it, what opportunities they see, and dare I say it, what the government is actually going to do, having done what it's done already, what it's going to do to help that recovery. It's son of CBILS, son of Bounce Back, or son of Enterprise Finance Guarantee. Something has got to be there to help. I don't think the banks, at the end of the day, love them or hate them. I don't think that they will be throwing money out at businesses that have basically can't show that they've got a viable proposition and a viable loan proposition. In terms of equity, and there's a lot of talk about equity. I think that's all right for bigger businesses, and that might be the case. But the smaller businesses, do I really believe from past experience that equity providers are going to put money into the small local business? Do I really believe that the small local businesses are actually going to want equity providers at this stage? I don't think so.
Yeah,
they're going to run through it with friends, family support, and with support probably from debt and the like. They're not going to actually do it through equity. The smaller businesses.
Yeah.
So the key will be the government, I think, and local connections like we've got.
Yeah, and that's so key, isn't it? And I mean, you mentioned Art's sort of financial year ended in March. You had a brilliant year just gone, and in some ways that's very reflective of what we've been seeing in Greater Birmingham, the West Midlands for I don't know. I mean, it feels like the last sort of 10 years or so, doesn't it, Steve? Where we've been on a roll. There's been great momentum, and it's one of these times where you think the whole world's had this shock. I think looking out, it's about trying to get ourselves back on track as soon as we can. We need the government support, but also the local relationships, knowledge. We understand the lay of our land, and that's where obviously the Chamber, we feel we can play a part as well of being a facilitator and a help sort of through that. And certainly what you do at Art and helping some of those businesses who do fall through the mainstream gaps and giving them that chance and opportunity. It's been successful in the past, and you've had some brilliant businesses who you've supported, and I've got no doubt that it will be in the future. But it's about here and now, making sure people are being smart, know their stuff, know their business inside out, know the support that's available. And certainly, as you've outlined really, really well, it's great to know that your team at Art Business Loans are there to have a conversation and see how you may be able to help for those who want to. Absolutely.
It might be Zooming at the moment, but let's hope we get back to face, even at 1 metre or 2 metre apart.
Absolutely. Steve, thank you very much.
Thanks, Paul. Good to talk to you.